What's up guys, William Ryan here back with another video, and in today's video we're going to be going over ICT's trades from this morning as well as my own executions. Alright, so ICT's trade right on US 500 or ES. Okay, we can kind of see that there is the SMT divergence here on the William %R as price trades up into a premium market. Alright, and so one of the things that I want you guys to be aware of is SMT in the price chart as well as in the William %R. Okay, we have to be aware of both because both indicate a change in state of delivery. And so we have in US 30 or the Dow Jones, we have price coming up here, taking out this high, right? At the same time, okay, US 500 or ES is failing to take out its respective high. Okay, and so the reason why we have to be aware of this at all times is because just like in the William %R, when we have setups where the William %R takes out the high, okay, but we fail to take out the high in the price chart and we come into a premium before we move lower, we have to apply that same principle in the price chart. Okay, we can also get setups like that as well. And so we have one indice taking out the high here, but on the price chart over on SMP, we're failing to do so. Okay, so this means that we're going to be having a change in state of delivery and price is going to be moving lower, right? And so here again, right, we didn't have the greatest signatures on ICT's entry from this morning, okay, but it was there. We did take out this respective high, right, as we were coming into a breaker order block fair value gap, especially on the 1 minute chart, if you guys want to check that out. Right at the same time, we have US 30 taking out this respective high here. And so with that being said, guys, I want to dive into my executions from today because they were very, very nice. And you guys are going to see when we get these characteristics within the price chart, right, we typically want to drop down into a lower time frame if we're expecting that low resistance liquidity run delivery lower, right, to try and find our setups, to find that optimal advanced setup on the lower time frame. All right, guys. And so if you guys are not following me on Instagram, I want you guys to do so, right? Because I have a lot of short format content over there, and I'm going to be pumping out more content over there as well in short format, okay? So in the form of reels, shorts, pictures, screenshots of executions, and that type of thing. And so without further ado, let's hop into the executions from today. Excuse me. Just going to get rid of this here. Today was a very, very beautiful day for price action. So we're going to hop down into that 15-second chart. And we're just going to go over my executions. And so here we can clearly see that we have the SMT divergence from that 3-minute chart. Just going to add the executions here. And there we go. So I'm just going to get rid of this sell side liquidity pool. And we're just going to highlight this one here. We're going to take a deeper look. And so I took multiple entries today. Right, guys, and I am not a financial advisor, right? Just to remind you, and everything that you see here on this YouTube channel is paper trades only. Okay, nothing is done in a live account. Okay, this channel is for educational purposes only. I'm not a financial advisor by any means. Excuse me. And so in the setups that I took today, right? So this setup we're not going to be focusing on, okay? But we're going to be mainly focusing on this setup in here as well as in here, right? And both come in the form of low resistance liquidity runs. You can see that as soon as I enter, price runs away quite quickly, right? Very, very beautiful low resistance liquidity run delivery. And so in this first example, we can clearly see, right, SMT divergence on the William %R. right? The 1% R is taking out the respective high. Okay, well, the price chart is coming into fair value, right? So we use the 1% R, the SMT, right? The divergence between the indicator and the price chart. We use it for internal range liquidity, right? So price is coming up into here, right? We have a balanced price range. Okay, a volume imbalance in here, as well as an order block. Okay, so I took a couple of shorts in here, and price ultimately traded lower, hitting our sell side liquidity pool here, right? Hitting that 2-to-1 R target that we target all the time, right? Nothing less, nothing more. 2-to-1 R is the way to go for this model, right? So I get out here. This was my first trade, and then price comes up once again, okay, back into a premium, right? With the draw on liquidity being lower. And so we have very similar characteristics here. We have the 1% R taking out the respective high as price comes into a fair value gap. Right? Also, we have this gap in here extended out in time. Mitigation block, right? Order block. There's another gap in here, right? This is also a breaker on a lower time frame, right? So a lot of confluence, a lot of things going on that aid in our analysis for price to continue moving lower, right? So as price retraces back up into the middle of the range or into a premium, the 1% R is creating a divergence, right? So this indicates a change in state of delivery. And if our target or our draw on liquidity is lower, right, it indicates to us that smart money is going to be accumulating shorts, right, in the form of a low resistance liquidity run. Okay, so we're expecting an expansion from this fair value gap here in this order block, right? So some very beautiful setups today, some nice and easy scalps, right? And so with that being said, guys, I hope you guys found this video insightful. Until next time, good luck and good trading.